Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Workhorse, ticker symbol WKHS. Workhorse released their Q4 and full year 2020 earnings report today, and there was a lot of information and cool details going on with Workhorse, and a couple of surprise facts and numbers that we're going to get into. We're going to talk about the chart and where the support and resistance lines are forming now that Workhorse has painfully lost over 50% of its value. We're also going to look at the numbers. We're going to dive deep into the statement of operations. There's a surprising number in there and a connection to Lordstown Motors that is interesting. I think you'll find exciting. We're going to talk about the surprise news about Workhorse challenging the USPS contract and what the CEO had to say about that. But first, before we dive into the details that you came here to see, I have but just one simple request. Smash the like button and click subscribe and join our family of investors. Now, let's get into it. First off, let's start with the numbers. Workhorse. This is for the full year 2020, not the quarter breakdown. So for the year, $1.3 million in net sales. That is up from $356,000 a year ago. That's good growth, but we want to see more than $1 million of growth per year for Workhorse. Now, the cost of sales. What did it cost to make $1.3 million? Well, it cost $13 million to make $1.3 million. We need to make sure we keep a close eye on that so it doesn't run away from us. Now, that is up from $5.8 million a year ago. So the gross loss for Workhorse in 2020 was $11.6 million. So you're taking the $1.3 million in net sales, you're subtracting out the $13 million of costs, and you arrive with a loss of $11.6 million. That is up from a loss of $5.4 million a year ago. Now, the operating expenses, this becomes kind of interesting. Now, the selling and general and administrative, that was $20.1 million, up from $10.1 million a year ago. Why is it up $10 million when they only brought in an extra $1 million in sales? That's because Workhorse, as a manufacturer of an electric last mile delivery van, has to hire personnel to build their products. Now, the research and development was only up an extra $1 million this year. It was $9.1 million this year, up from $8.1 million last year, and they're building something revolutionary. Now, the total operating expenses, $29.3 million, up from $18.3 million a year ago. Now, here's the most interesting part of their financial statement. This other income right here, $323 million. That's up from $15.8 million a year ago. Why such a big gain in other income? What is this other income that has brought in for Workhorse $300+ million? Well, it's their part ownership into Lordstown Motors. Lordstown Motors stock currently sits at $20.60. And since Workhorse owns a part of Lordstown Motors, when the stock rises for Lordstown Motors, that means their equity in the company also rises. That's where that extra $300+ million came from. I found that fascinating and interesting that they have gained so much already. Now, next, we've got our income from operations at $282 million. and that is up from a loss of 8 million a year ago. And this, again, this big difference, this big number, it all comes from their partial ownership of Lordstown Motors. Now, on their balance sheet, currently sitting in cash or cash equivalent, we've got $46.8 million, up from $23.8 million a year ago. That's good to see. They need cash to grow. It takes money to make money. Total current assets, $290.4 million, and that's up from $31.5 million a year ago. Now, liabilities, we've got 10.7 million, up from 5 million, so doubling their accounts payable, which is expected since they need to produce their last mile delivery vans. The total liabilities is 237 million, up from 85 million a year ago. Now, let's jump over to some of the most important numbers. Sales for the fourth quarter of 2020 were $652,000, up from just a mere $3,000 in the fourth quarter of 2019. That's a 21,700 plus % increase in sales for the fourth quarter this year over last. Now on to something that is on all of our minds, Workhorse and the USPS contract. What is happening and what will happen? Well, on the earnings call, the CEO of Workhorse made a statement about this, and it reads, "We appreciate you taking the time to join us today. To start, I'd like to take a minute to directly address something that's been top of mind for us as well as many of you listening today. I'm speaking, of course, about the United States Postal Service Next Generation Delivery Vehicle, or USPS NGDV program. As many of you are aware of, last Tuesday, the Postal Service issued a press release announcing it had made an award under the NGDV contract to a competing finalist. To be clear, we intend to explore all avenues that are available to us. We appreciate your patience in the meantime, as we allow the process to work through its proper course." That's Workhorse's CEO talking about the USPS contract. They're saddened by what happened, and they want more information on how this occurred. If we look at what's happening since the USPS made their announcement, I'm on our website right now, tickertimenews.com. We've got a big article up about Workhorse's earnings report and the USPS contract. Fighting for U.S. Postal Service contract, quote, "We want answers." Now, they have a meeting with the USPS on Wednesday to find out what happened. And Workhorse stock losing 50% of its value. A lot of people are upset. They're emotional about what happened. This decision by the USPS to award this contract to a competitor who's going to build 90% of the order is going to be ICE vehicles, internal combustion engine vehicles, and only 10% is going to be electric. Well, under the Biden administration, Biden has specifically singled out the U.S. government fleet of vehicles and specifically has singled out transitioning that fleet of vehicles to being green, electric. There's a big push by the Biden administration to make this happen. So, how could the USPS go completely opposite of that with awarding the contract to Oshkosh, who's going to, again, build 90% ICE vehicles and only 10% electric? Well, there are members of Congress who are angry at the decision. Specifically, Congressman Tim Ryan. He wants the contract between the USPS and Oshkosh scrapped completely. He sent out a tweet that reads, quote, "The USPS has the largest fleet of government-owned vehicles. If we are going to electrify the government fleet like POTUS says, we need to start with USPS. Yet, Postmaster DeJoy says new USPS vehicles will be 90% gasoline. That's unacceptable. This contract needs re-examined." End quote. All right, let's talk about Workhorse and their stock performance. Workhorse over the past 3 months, you can see on the chart, has been very volatile to say the least. It's bounced around. It got to a high over $40. It crashed over 50%. It was a wild ride. Now, let me just touch on this and then we're going to go to the stock chart. Since the hard fall from $30 to $15, and $15 is about where it got down into the 14s, but not for very long. The $15 line is a very important line because it was an old support line. So Workhorse stock has been bouncing around support of $15 and resistance at $17. The interesting part, these are old support and resistance lines from January 2020. Over a year ago, this is where the stock, surprisingly, had its support and resistance. Now, currently, with the news that Workhorse is going to fight for, at the very least, answers, which is, again, they're going to build 90% ICE vehicles and only 10% electric. Instead of going like the Biden administration wanted, 100% electric from Workhorse. So the stock has slowly started to use $17 as consolidation. That's exactly what we saw on trading on Monday. Now, again, we'll have to wait and see what comes out of the meeting on Wednesday between Workhorse and USPS. So let's go look at the chart. And if we look closely here, to the right, we've got this big red candle. This is 51.9% loss. That one candle right there. 51.9% loss. Let that sink in for a minute. But since that drop, this blue line is at $15.53. This has been acting as, you can see it acted as support, resistance, 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 support, resistance, support, resistance. And then here, February 25th, we had a lot of volume, a lot of buying. ARK Invest was buying heavily into Workhorse at these discounted prices. So it went up, it went above the $17 line just for a few hours. This is the 30-minute chart, so every 30 minutes there's a new candle. So as you can see, for an hour at the most, it was above the $17 line. And then it used 15 as support, 17 as resistance, 15 as support, 17 resistance, and you can see it. But right now, today, if we zoom in a little bit closer and I change this from 30-minute candles to 1-minute candles, we can see right here a sharp rise to the $17 mark. And then it stayed in the $16 and then again back up to the $17 to close out the day. And right now, if we're looking at that, it's right here on the $17 line instead of further, say, down here at the $15 line or even 16. So we have some consolidation, and that is good. I hope you found a ton of information about Workhorse. I know I did going through this with you. Make sure to smash the like button, click subscribe, and join our family of investors. I'll see you in the next video.